Construction accounting is a niche. It's not like doing a law firm or a florist. It's very specialized. And I think that's where contractors can fall over in their decision making. Having a line of credit or alternative financing that gives them cash in their pocket in order to pay their people and their suppliers is imperative.
Welcome, everybody. My name is Scott Pieper. I am the CEO and co-founder of Mobilization Funding. You are listening to the Real MF'ers podcast with myself and my co-host, Autumn Sullivan.
Hi.
And today we have a very special guest, Suzanne Cox. She is an accountant, a CPA, and a partner with Saltmarsh, Cleveland and Gund. They are a national accounting firm with a very strong construction presence here in the Southeast. You probably have seen Suzanne before on many of our shows and podcasts and webinars, and she's a repeat guest because we love her so much. Suzanne, how you doing? Welcome.
Pretty good. Thanks for having me. Glad to be here.
Awesome. So we're going to jump right into it. What I want to try to talk to you about today is we've gone through a lot in the construction world in the last 2.5 years, as many industries have, and I know you guys have a focus across many industries, but a little bit of focus on construction. We have a unique presence that I think that there's few folks that are in the construction industry, but aren't either a general contractor or a subcontractor. And it's those folks that see the entire chain of an owner, a GC, and a sub that can really and uniquely are qualified to speak to some of the nuances around construction and what things can change and where the pain points are for everyone, and avoid the finger pointing of, oh, that's their fault, and really just say, this is a problem, and everyone can be part of the solution. So talking about that right now, going through COVID and coming out of that, what have you seen are some of the advantages and disadvantages that COVID has brought to the construction industry? Is there anything that's beneficial or have helped?
Advantages of COVID. So it did get everyone to take a closer look at their company. Retaining talent was big that I think needed a focus pre-COVID, and COVID forced it. So, looking at benefits packages, looking at how much people are paying their employees, looking at employee benefit programs, looking at ways to streamline their business, exploring alternative supply chain channels, exploring alternative vendors, just things that you should be doing on a regular basis that I think a lot of construction companies can get comfortable in a certain set of things, and it forced them to think creatively about some of their main, business processes, again, supplies and people. That's like the biggest two things. And it made them reevaluate how they're doing business in those two areas.
On that note, is there anything that you saw of all the companies that you've watched and observed over the years, as they've come into COVID and now we're leaving COVID, what are the few things that the companies that made it through and survived and did a good job and are now on the other side, hopefully even a better company? What were the differences between those companies and the ones where COVID was just the nail in the coffin that ultimately either put them out of business or they had to really completely revamp their business, and they're just not the same if they're around at all coming out of it?
Yeah, sure. So fortunately for my client base, most came out of COVID pretty good. No nails in coffins over here. But, obviously I have seen it in the market and the community, obviously. And I would say the differences between those are the ones that didn't, kind of immediately start managing cash, getting in front of jobs, figuring out, again, alternative supply chain channels. The people that are, they just kind of sat there and waited, like, let's just wait and see what happens. Let's just, it's going to go by, it's going to be gone by July, and then in July it got worse, and so I think the people that, and I hate to overuse the word pivot, but the people that pivoted quickly and adapted to change are the ones that made it through the best. is I guess my experience. Even in my client base, although we had no nails in the coffin, the ones that made it through better were the people that were in front of it. Like when we were doing calls early on in, March, when the government shutdowns were just coming out and PPP was just coming out, the people that were receptive to our calls, like, hey, you got to start doing this, you got to do this. It was very stark difference between the clients that were like, oh, tell me more, and the clients that were like, yeah, this will be gone by summer. I don't know why we're even talking about it. I would say those are the big differences.
What are some of those specific things that you were saying, do this and do that? Like again, I agree with you. Cash is important, managing cash immediately. But what were those immediate exercises or action steps that you were recommending to put in place that the companies that were adhering to that, panned out really well, and the ones that kind of a little more lackadaisical or didn't act as fast? What were those action steps?
There was a couple things. So one of them was like shed the fat. If you've got extra expenses right now, get rid of them. If you've got extra people, this was before, again, like PPP had really officially come out. And of course, it turned out that you didn't want to let too many people go, but everybody's got a little bit of fat, whether it's in people or expenditures or, some sort of cash flow management was, look at your cash flow, look at your necessary expenditures, look at, this may last, 6 months to a year, charting out, doing some projections. One of the other things was, what was the start? Give me the question again. Advice on what to do. Yeah. So one of the other things that was really, really important was debt management. So people were scared of like, oh my God, I'm going to go under, and so we were telling people to renew their lines, try to get increases on their lines, talk to your banker. Like that's the first thing we told people when we called them was call your banker today. I mean, seriously, we're going to get off the phone. What are you going to do? You're going to call your banker, because you need to get on top of that. Like make sure, and understand what your covenants are. See if you can increase your lines, see if you can extend out your terms, anything that you can do with your banker right now, you need to call your banker. That was one of the things that we, initially advised people to do. The other was when as soon as PPP came out, a lot of people were very hesitant to take PPP. And we were like, no, you need to take it because, it's meant to help you get through this, and it's meant to help you manage cash flow and things like that. And in 6 months to a year, I guarantee you will wish you did it. And if you don't want it, if you get it and you don't want it, you can pay it back. So it's like one of those things that if you ultimately end up realizing I didn't really need this, or I didn't want it, or I feel wrong taking it, then pay it back. There was no downside to taking the money. And so as soon as PPP came out, we were advising everyone to take PPP.
Going into cash flow for a minute, and Autumn, I think this is one of the questions that you were going to ask, but I'll jump the gun on you real quick. What are some of the financial issues that construction business owners run into, especially small and mid-sized contractors? So we've talked about what COVID did, and we understand how that brings it in. It brings cash flow problems into concern. But what is the general common business themes that your construction company or contractors are doing that bring cash flow concerns to them on their own? Things they could control outside of an epic event like COVID.
Funny enough, they're kind of the same, because one thing I probably should have mentioned in the last question was, try to collect as soon as you can. So that's one thing that contractors are not always able to collect when they want. They've got their hands tied, especially subcontractors, because it's a sort of paid when paid kind of thing. So when the customer pays the GC, then the GC pays the sub, and the sub sometimes can't get paid for a pretty long time. So one of the things that they run into is they've got to pay out for supplies, and then their people, they've got to pay their labor, and then they don't get paid for quite some time. So having available cash, back to the comment about a line of credit or alternative financing that gives them cash in their pocket in order to pay their people and their suppliers, is imperative for construction companies, because they may not get paid for 60, 90, 120 days, depending on the contract, stipulations. So one of the things we always tell people is, get the best contract terms that you can. get paid as fast as you can, try to negotiate with your suppliers for longer terms potentially, or negotiate for like a 2% 10 net, kind of thing. So if you pay within 10 days, you get a discount, in order to reduce your expenses, or try to get, 60-day terms. So you don't have to pay your people for 60 days. So just managing the timing of cash can be very important.
So I'm going to take a step back even further, because I always like to hear the stories of our guests and how they got where they are. So how did you decide to become an accountant, and how did you decide to start specializing in construction?
So I was this geeky little kid, and I wish I were kidding. I really wish I were. I used to play accountant, only I didn't know what it was called. And I had these ledger papers and calculators, and I had like an office, only I didn't know it was an accountant or a CPA. I didn't have any clue what that meant. But I would like balance a fake checkbook, and I would make cash flows when I was like 8. Yeah, I was that kid. Please don't judge me. And I didn't know what it meant, right? I really didn't. And as I got a little bit older, I realized, oh my God, I want to help businesses. I want to help them, and teach them these things, because not everyone that starts a business knows about finances. And I, for some reason, at a pretty young age, realized that my friends had no idea how to manage their finances. They weren't saving any money. And I mean, what 12-year-old saves money except an accountant? So I had already had a 401k when I was 12. And I wanted to teach people about this, and help them understand what they needed to do to set themselves up for success. And of course, as I matured, I realized I was called a CPA or an accountant, or, just some kind of financial advisor. So here I am today doing my passion, which is helping my clients figure out how to run their business better so that they can focus on paving and, running electrical wire. And so I'm a firm believer that you should stick in your lane. I don't try to do open heart surgery on myself, nor do I expect anyone else to. I don't want to pave my driveway when it cracks, and nor do I think contractors should be trying to do accounting, although they try. So I wanted to be that person that they could go to help, to help them figure out what to do. And construction specifically, I when I was young, I started auditing, and the most fun I had were on my construction clients and my manufacturing clients. So I liked going out to job sites. And of course I had that one client that would let me drive a bulldozer. And I was like, oh, this is awesome, and I just connected, I think, with the industry as a whole. I could also maybe speak at their level, and as you know, that's sometimes tricky, knowing all the lingo that went with it. So I just sort of fell into it, and then have just kept growing my book of business in the area. So here I am today.
I hope someday you write a book about accounting lessons from a 12-year-old, because I think that's your Amazon bestseller, Suzanne.
Yes.
We'll talk later.
Okay.
I think you made a great important point, and you talked about specializing in construction and why you liked it and how it brought you there. And I couldn't agree with you more. Tell me though the difference between why, if you're talking to a room full of owners of a company, construction companies, what is important for them to know about their accountant in construction versus just going to hire any accountant or CPA?
So it's a niche. Construction accounting is a niche. It's not like doing a law firm or a florist. It's very specialized. And I think that's where contractors can fall over in their decision making, is they just go to the corner CPA or whatever it is, and that person doesn't know how to deal with the complicated nature of construction. So that, not to get too specific, but over and under billings and the way that their business and their cash flow works, and what is the the bank looking for, and what is the bonding company looking for. And so the surety piece is extremely important to construction. That isn't an issue in all other industries pretty much, and so what is that surety looking for, and what does that contractor statements need to look like in order to get what they need to do their business, because most of them have a requirement to have a certain level of surety credit essentially, and in order to get that, they have to meet certain ratios and have a certain balance sheet, and to be able to help them manage their balance sheet in order to get what they need to do their business is, again, very specific. And a normal CPA that doesn't specialize would not know what those qualifications were, and they just wouldn't be in tune to what was needed.
Yeah, and then the burden's on them to educate their accountant.
Right.
Versus it's just another thing they have to learn. You hire your accountant to try to make sure your financial life in your business that's complex, for which most construction business owners don't start with a finance background and say, I'm going to get in construction. They start as a technician doing some aspect of work and then end up with a business. And that would make it even more difficult to then have to learn how to explain your business and the financial nuances of it to your CPA. I mean, that makes that alone.
Yeah, and there's very specific like tax code and GAAP, which is like for, financial statements. It's very specific that even a contractor that knows their business doesn't know that, specificity of the tax code, that what is the most advantageous way to structure their method of accounting for tax purposes. And again, for like financial statements, they wouldn't know, just because they know their industry, they wouldn't know all the rules that go into the financial statements in order to present them in accordance with GAAP, which is our governing body. So even knowing their industry, wouldn't be able to train a CPA. The CPA would need to go get their own, training.
Yeah. So there's you mentioned, the benefits of working with a CPA versus trying to run your own books. And we've talked on that, but is there any specific type of software that you feel is better utilized for construction companies that either if they're managing themselves or they're going to acquire before they find a CPA that they need or should be working with outside of like the traditional QuickBooks or something like that?
For the love of God, get with your CPA before you set up accounting software. So QuickBooks is an okay, I will say that with air quotes. It is an okay software for contractors. They have a construction version. It is not robust, but it will do. And it depends on the size of the business and the complexity of the business. And it depends on how complex you want to make your life. So I meet with some contractors that want to count everything down to the nuts and the bolts, and they want to job cost everything. And then I've got some contractors, they're like, nope, high level. I just need to know what my labor is, what my supplies are. They don't feel the need to like track paint or something, and the different colors of paint. And as a CPA, we of course don't recommend that, but it depends on the client, what the client needs and wants. And we want to help them get the financial statements that will help them run their business. So whatever they like, we will try to make happen for them. But a QuickBooks would not be your go-to if you wanted very, very detailed, very specific information. It does not also like job cost, or overhead. It doesn't do overhead allocations. So you can't like equipment cost things, and you can't allocate your overhead in QuickBooks through the system. You have to manually do it and then make journal entries. So some of the softwares out there that are construction specific, and there's a lot, there's the Sage platforms, there's the, I'm drawing a blank on some of the other names, but there's several out there that are very popular that we have a lot of our clients using that can get very specific. If you want to set up your equipment overhead rates and have your labor rates and your labor burdens and all of those things, it can do all of that for you. And you punch a couple buttons and it allocates on a monthly basis, and you've got on the minute, information. And it, depending on your size and your banking covenants, you may need that sort of information. Your bonding company may want quarterlies, your bank may want quarterlies, you may be monthly, depends on what your needs are. And again, what your size is. So the more complex and the larger you get, the more sophisticated software you'll need. And, some of the more sophisticated softwares can get very expensive. And so some of the new contractors, they're fine on QuickBooks. A young construction company that's under 15 million really has no reason to dive into that bigger boat until they, have a reason. Like if they're on a huge growth trajectory and they know they're going to be, bigger later, then start with what you want to be on later. But it takes a hot minute to go from 0 to 20 million. So we always tell people, to just get started. It's fine. QuickBooks is fine, but you'll eventually need to upgrade at some point.
Yeah. It does go by faster than you think it's going to, though.
It does.
Minute sometimes feels like a hot 10 seconds.
I will agree with you there. Like it depends on the contractor. They grow. I mean, from 0 to 20 million, it's aggressive growth, right? So it does go by fast, though, if you're that contractor and you're growing that fast. And in that case, if I was sitting with someone advising them on what to do, and they said, "Hey, I really think I'm going to be at 20 million in 2 years," I would say start with the big boys. Then start with the higher, value, more robust software. I would say not start on QuickBooks, but if it's a 5 to 10 year plan to get to 20 million, I would say go ahead and start. You can do a nice usable QuickBooks setup, and then start to migrate, 5 years in and make that transition. But it depends again on your growth plans.
Yeah.
You mentioned talking to your CPA before you purchase the software. So I'm going to hook on to the communication angle of that, because I know we've talked before about the importance of having your project managers talk to your office, your actual accounting, the people who are doing the accounting in your firm. And you've recommended.
So you listen during our webinars.
I do listen. I've learned so much in the last few years. And you recommended them having like a weekly meeting. And I remember in that webinar, there was a lot of like, how in the world do I get these two teams to talk to each other? So I was hoping we could have this opportunity. You could give us some tips on how to get those two sides of the business in the same room talking to each other.
So you started it with saying, talk to your CPA before you buy software. Talk to your CPA, blame them. So many contractors have trouble doing this, right? I advise them to do this. And then a month later, we're having a catch-up meeting. I'm like, so how's the meetings going? And they're like, ooh, not good. Or they're like, oh yeah, no, they're great. We haven't met, so they're really hard. I know they're hard. So, get your CPA involved to actually organize and hold the meeting, to run the meeting just a couple times to get it kickstarted so that everyone on both sides understands the importance of having those meetings. Because I don't think the field guys understand how important it is and how it's necessary for them to make more money. You've got to swing it. You've got to have an angle that they care about. So what is that? It's probably money, so, hey, the job, if it doesn't do well, you don't get paid. You've got to have the jobs do well. And what they miss sometimes, again, is that connection with the office of, what costs are going into my job? What was my budget that I originally gave you? Where am I at in the process? Because if they don't know that information, they're out, just spending money and, running the job, trying to get it done. And sometimes that can be very expensive because they're on timelines and sometimes make bad, monetary decisions because they're working on timelines. And then they go back to the office and the office says, well, hey, you blew that job. I mean, it's negative gross margin. And they're like, what? They should have known that, they should have known that it was a negative margin. And so there should be no surprises at the end of the job. And without those meetings, there's going to be a lot of surprises.
Well, I feel like one of the things that I've seen from my friends and family that are in construction is when that moment happens, when you're on the job and you have to make a decision, you call your boss, you call the owner of the company and ask them if it's okay to make that purchase. And they say yes, right? Because they don't know either. When you should be calling the accounting department. Right. You should be calling
and asking them what the budget is and where they're at in the budget. And if they have that money to spend and, or do they need to get a change order? Because where I see contractors lose the most money is lack of signed change orders. They go do the work because they're in the field and they just want to get it done and get out of there and make the customer happy. And they'll do work that's not planned, it's not signed, and you will never get paid.
And it costs at least at a minimum a day's worth of labor or 2 days or whatever the labor is.
Oh yeah, it depends on the project. I mean, it depends on what they want to add on to it. But I mean, this is a common thing. This is not, a surprise to anybody that's listening that's in construction. I mean, change orders is where you make or break a job. So
on that, on the communication angle, we talk to a lot of subcontractors who are hesitant to talk about their finances with their general contractor when they're in the bidding process. They're like, I'm not going to show my numbers. I'm not going to talk about how I'm going to finance the job because it puts me in a position of weakness or vulnerability. We obviously feel differently. We think that if you can show your numbers and show your plan on how you're going to perform the work, it's actually a position of strength. So my question for you is, what communication tips do you recommend that they show their numbers, and how would you approach that conversation with a general contractor?
So I'm going to use the attorney response here.
Nice.
And it what?
Nice.
No, yeah, it depends. So it really does, though. It depends on the situation. Before I would advise anybody open up the kimono, I would want to know the situation behind it. I do think transparency, I'm big on transparency. But again, it really depends on the situation and who's got leverage, and there's some other just factors. So I'm going to take the attorney response on it depends there. Obviously, if it behooves you to do it, meaning it can show strength that you're qualified to take a job, many GCs require bonding for their subs, which means you have to show them. You have to, show them your financials, and you have to be bonded, and you've got to have a certain, again, back to ratios, a certain, you've got to meet certain ratios in order to even get jobs. If you're working with a good GC, they're probably qualifying their subcontractor. So you're going to need to be in a good financial position to even get a job with them. So in that case, you don't really have a choice. Now, if they're not asking and you're kind of hurting, then again, it depends.
What if you're building out like a specific project or even estimating a project? Do you recommend just you show straight up, look, this is my margin, this is where my profit is, and then more importantly, put it into the schedule of values, or do you kind of give recommendations or guidance on how they should incorporate their profit into the schedule of values?
I got to use attorney again. It depends, right? So not everyone requires, again, not every GC requires a sub to be that open about their margins. And so I'm not a huge advocate of like, just show them if they don't need it, or, show them if they don't ask for it. But that's maybe the conservative nature of CPAs is unless it's a requirement, it's like, don't share too much. Just for the point of sharing. Even when we're doing financial statements, we don't overshare. We share what's required by the law and or our code. And we don't overshare, because that can raise other questions that may raise other questions that may raise, other questions. So less is more sometimes. Again, it depends on the situation. Again, back to like transparency and having open, communication, firmly believe that is the best business relationship to have, is to have one that has open communication and transparency. But again, it would depend on the, situation before I advise somebody, give them all your stuff, just open the doors. I would be a little hesitant to just make that blanket statement that that's how I would do business,
So it sounds like the advice is you should talk to your CPA before.
You should talk to your CPA. When in doubt, talk to your advisors. Everybody's got a circle of trust, whether it's your, CPA, attorney, banker, bonder. That's kind of the short list for our construction company. We like to meet with that circle of influencers with our clients. Like, let's meet with your bonding company and your banker all together in the same room, and let's talk about your goals, because your goals for bonding may not be so great right for your tax position. And so we want to be on the same page with your bonding company. Like, hey, we got to make some certain decisions from a tax standpoint that may affect the bonding. So let's talk and let's figure out what's needed. Your transparency discussions were more with a GC subcontractor relationship. My transparency that I think is huge is going to be with that circle of influencers, like your bonding company, your banker, your attorney, your CPA should all be on the same page. We should be opening the kimono for all of those people. They should know exactly what the goals are, exactly why decisions are being made, exactly, the position, again, from like a tax standpoint, how it will affect, their the bank statements and the bonding company's requirements. That in that terms of that kind of transparency, that is, I'm 100% on board with being fully transparent.
Yeah. Do you feel like I'm going to switch gears a little bit, Anya. So I guess I want to talk about some of the programs that were launched during COVID that to help, specifically programs that are either designed like PPP or the ERC question for the ERC credits, for example, and then some of the slowdowns that the IRS is having right now. Do you just have a general opinion on any of that in general, or what we could do to navigate that?
Yeah, lots of opinions. So the IRS, I feel bad for them. Poor IRS. You guys on a podcast can't tell that was sarcasm maybe, but they're really hurting though. I mean, unfortunately for them, they're hurting bad. They're so understaffed. And things are sitting there. I think I read something the other day that said they had shredded 500,000 disclosure forms just because they couldn't process them. So they just shredded them. They're like, you know what, we don't need these. We'll just shred them. So great job, IRS, for making the person fill out that form, probably paid a CPA to do it. And then it didn't go anywhere except the shredder. That makes me feel really good about it. But anywho, so they're asking for more money. I think they went to Congress and the Senate and the powers that be to get some more funding to try to get rid of their backlog. Right now, a lot of their backlog is because they are not fully paperless, so they're still doing paper, and that's where the backup right now is with paper returns. As it relates to the programs, now the IRS is governing over the ERC and SBA is governing over PPP. So the IRS doesn't have any involvement in like auditing a PPP loan. That's all on the SBA. As it relates to ERC credits, that's an actual tax credit on your payroll tax return. So that is the IRS, and they are managing that process. And our advice to clients has been, just be very cautious with the people that you're using to consult with on the ERC credit, because there are some firms out there that are getting paid on the credit amount. So if they get you a $2 million credit, they're taking 20% of that credit. If you get a $10,000 credit, they're getting 20% of that. So it's not unethical. Like, I'll throw that out there, that it's not like it's not against the rules. There's nothing they're not breaking a law, but it's a little sketch. I think like we bill by the hour for that type of work. And so we say, hey, here's our hourly rate. Here's how many hours it took to do this credit for you. Here's how many hours it took to amend your tax returns. And that's how we bill. And it's very straightforward. So the firms that are trying to get these credits up in these astronomical numbers is because it's because they're getting paid based on a percentage of your credit. So they are being a lot riskier when it comes to the amount of credit that you're going to receive. And so we started doing, this was a couple of weeks ago, a client called and said, hey, I've got this consulting company that says I can get a $2 million credit. And you guys told me I couldn't get anything. And I said, that's correct. And I still am sticking with my position on that because I'm not signing off on the $2 million credit, so if they're willing to, then Godspeed, definitely go with them. I, again, caution you to not spend that $2 million though, because the IRS is so behind that they may not audit that for 3 to 5 years, and you don't know. We just don't know, right? This has never happened before. In my, at least, career, there's never been the amount of stimulus money and stimulus opportunities that I've never seen this. So when people are like, well, what's going to happen? I don't know. I don't know what's going to happen in 5 years. If they're going to audit you, if they're going to make you give the money back, I don't know, and as a CPA, we're very cautious as a profession, and none of us want to lose a license. So we will take the cautious approach because that test was not easy, and none of us want to get kicked out. So anyway, my advice, I guess, generally speaking, is to just be going eyes wide open, be very cautious about it. Now, ERC is a totally legit thing. And if you qualify under, the law, it's absolutely 100% you should do it. There's just some companies out there that are getting a little aggressive with what the law means and what the intent of the law was for. And I would just be very careful. Ask for backup. Like in this case, I was like, I want to see their calculation. I want to see how they've come up with this number that they think they can get you. Because if they won't show you your calculation, then how will you support it with the IRS later when they audit you? So you need to be very careful. We also Googled the firm that said they would get this $2 million credit, and the firm was organized in December of 2021. Yep. And it will probably only exist for ERC credits, and then it will be gone. And then you will have no one to go back to, even though they're saying that they'll support you in the IRS audit when it comes, because it will. They will not be around to support you. And so again, just be very cautious. That's all. I don't want to scare anybody. But if your CPA won't sign off on it, it's probably not a good idea.
Oh, good advice. All right, we have a little thing we like to call the lightning round questions. So
Fun. I love lightning rounds. This is like, no, it's like a thing in like my family and friend group with games. It's the lightning round,
That's right.
Yeah.
So, and you're uniquely qualified to answer this first question. So I'll ask you first.
Does this mean I have to answer really fast?
You can if you want. It makes it sometimes more interesting, but you never know. Whatever you feel is best.
Well, lightning, makes me think it should be fast.
We should implement some rules and some structure around the lightning.
I feel like I do need some rules and some structure around these games. I can't say competitive.
She needs to know how this is going to work. She needs to.
Look, I'll tell you exactly. You should say exactly what enters into your brain, unfiltered, right out of the gate. As quickly as possible. And don't even think about it. So all right. The question is, what is the one thing that you believe determines a business's success or failure?
Employee morale.
That's great. I was not expecting that.
That's a great answer.
What advice do you wish you had at the start of your career?
Oh, that's a hard one to answer quickly. That one I kind of have to think about. Usually I'm good with this one, but right now I'm drawing a blank on what that would be. So what do I wish I knew at the beginning of my career? That no one is going to manage it for me.
Another good answer. Do you have a certain piece of wisdom or advice that you would like to share with our audience?
Oh, we've been talking about so much stuff.
It doesn't even have to be on the topics what we talked about.
Don't eat yellow snow. Advice for our audience.
From Florida, don't eat yellow snow.
That probably isn't for this audience necessarily. It might be for a different audience. The 12-year-old audience. Get that circle of trust. I guess that's my best business advice is get a good circle of trust in your professional world. People that you respect, admire, trust, want to be like. Always scale up, not down. And that I think goes for friend groups too, right? You always want to be around people better than you and more impressive than you and have achieved more than you because they will bring you up. I think that your circle of trust is that's who defines you in the long run, is who you spend your time with, who you believe, who you trust, who you admire. That will define your business and your person in the scope of your life.
And I have one last true or false question. Businesses either grow or shrink.
False.
False. You can stay the same size?
Yeah.
Okay, interesting.
We're going to have to come back for a part 2 just to have that conversation.
Yeah, that's good. That's where we disagree. I'm very curious to hear that.
Scott and I sit on different sides of that story. And Suzanne, I'm with you.
So I should suppose clarify. I don't think shrink's the right word if you wanted to get me to answer the other way. I do believe if you're not growing, you're dying, sort of.
That's the
right. But shrinking, no, I won't agree with shrinking. Shrinking is different than dying.
Well, but actually, the right way I should have asked it is, do you feel, true or false, businesses are either growing or dying? That's actually the way I usually ask the question. Why I said shrink, I have no idea. But I believe you're either growing or you're dying. That's what I believe. There's no in between. You can't just get comfortable and stay there. It's hard. It's very difficult to try to micromanage that in the business.
Yeah, but there's a lot of people that do it. So I still might have to say I would go false. Although I see conceptually, I agree with you 100%. But in numbers, I disagree because you can stay the same size for many years and just remain stable. And, you have X amount of income that you want to take home every year, and you for the most part can manage that, and you can stay there for a while. So I would, from a numbers perspective, disagree with you. From a concept and a theory, I would agree.
Yeah, I agree on a numbers standpoint. We used to call it in my medical device days, the leaky bucket. Like, you have to manage the leaky bucket. If you're constantly you have a 100-person sales force and they're constantly going out to get new business and they're convincing new doctors to use your products they never used before. But at the same time, you're losing customers too because you're not managing them. You can stay the same. Like, you might have grown or added hundreds of new customers, but if you lost 80, your net is only 20. There's really no reason you should lose customers if you are taking care of them or doing what you're supposed to do, blah, 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 is the theory. So that's, again,
that's why I said theory. I 100% agree with you, but you could have the same customers for many years.
That's right.
So if you think of a CPA firm, I'll just use our profession. We have a attendance, I think it's a typical turnover rate for a CPA is 7 years. And so you could realistically have the same clients for an extended amount of time. Like at Saltmarsh, our client retention year in numbers is in the 20s. I mean, wow. Yeah, it's very, very high. We've had a lot of, we have companies, clients that have been with us since the 40s. They're still with us. And so if you just said, hey, I'm going to serve this book of business, these clients, and they stay with you for say 20 years, you could have a whole career with the same clients, Yeah. So you could make the same amount every year, just about, to give or take inflation or whatever. But, so it depends on the business. In construction, I might agree with you more, but you didn't really specify an industry. So, so I would say it's industry specific,
Cool.
Well, I love all of that because I love anytime someone disagrees with Scott because it's always fun to watch.
That's your lifetime goal.
Well, because it's usually me. So
I think I asked the question the wrong way. If I asked it my normal way, she might have said yes, but then we would have missed out on all that wonderful.
Right.
Yeah, you asked it wrong because I disagree. It doesn't mean it's shrinking.
Right.
Yeah, I'm glad I asked it that way because it made it a lot more. If you just said true, then we might not have had anything else to hear.
We'd have been done.
Yeah, we'd been done.
Well,
Suzanne, thank you very much. This has been awesome. You did great on the lightning round. Prizes for you coming your way.
All the swag bags.
I do like prizes.
Well, that was great. Thank you very much, Suzanne.
Yeah, thanks for having me. This was really fun. And of course, you guys know how much I love to work with you all. So thanks for having me.
We'll see you again soon, I'm sure. Thank you, everyone, for listening.
Thank you for listening to us. You have listened to an episode of The Real MF'ers with Suzanne Cox and Autumn. Always a pleasure to have you. Thank you very much for joining me again as my co-host.
Thank you.
And you all have a great day. Take care.
Thanks, guys. Have a good one.